investing. Do you want to broaden it out, though? Welcome in our next guest. Joining us now, Dale Smothers, President and CEO of RDS Wealth Management. Dale, great to have you back on the show. Happy Friday to you. Now, you
Happy Friday.
Yes, I know, right? The weekend is almost here. But
Right.
you have been one of the more bullish voices. You've maintained a bullish outlook every time we speak. You are still sticking with your 8,000 target by end of year. So I want to know, what is giving you confidence that we still have room to run here?
Yeah, we still have room to run by one word, Marley, and that's earnings. Earnings remain strong, and there are some headwinds that we may face that would put a little bit of volatility into this year. I expect that volatility, and this is our message to investors. For our clients, we are preparing for that volatility, and we can go into that here in just a few minutes if you'd like. But the idea that 8,000 is achievable is certainly still on the table for us, and there is maybe one or two things that may derail that altogether. But the idea that earnings continues to grow, we think that the market has looked past inflation to this point, and the continued optimism and build out of AI are going to continue to drive this market higher. There are four main things that have to happen for the market to hit 8,000. In our point of view is that AI demand has to continue. That AI demand is obviously going to spark more optimism. We've got to see oil continue to not be a problem for us. Below $100 a barrel is a must for us. And again, if that continues to tick higher and stays higher, that could pose a problem. We believe that earnings has to continue to grow, and oil could be the big determining factor as to whether that's the case. Earnings could suffer because of price of oil and energy. And then lastly, we have to have investors that stay calm through what we believe is coming, which is a little bit of volatility this summer and into the midterms.
Okay, so we have to have AI demand stick with us. We have to have oil below 100. We have to have earnings growth continue, and we have to have investors keeping their cool no matter what happens. But I want
Stay calm.
I want to jump back. You said there are one or two things that could derail your thesis. What are those one or two things, Dale?
Yeah, I think oil staying higher, and the idea that oil stays above $100 a barrel, that inflation becomes a noise that we just can't ignore any longer. The labor market stays strong with this inflation facing the Fed. As much as Kevin Warsh doesn't want to do it, there may be a forced rate hike, and that would not help the market in the short term for sure. And clearly, the 10-year note really doesn't care what Kevin Warsh does. Ideally, if inflation continues to remain higher and the labor market stays strong, we see the 10-year note creeping higher. This could put a dent in that thesis as well. And I'll tell you one more, is this idea that this, and what seems to be a bullish sentiment really could actually put a little bit of a pause on this 8,000 this year, is this IPO wave that we see coming, these mega IPOs that are causing a lot of money to flood into them perhaps when they IPO. Where's that money coming from, Marley? Is that coming from something else? Is that just rotating out of what we would consider leadership now and forming this new band of leadership? Or is that money coming off of the sidelines? And that is still the wild card yet to be seen.
I had a guest float to me yesterday that it was the reason we're seeing a lot of downward pressure in Bitcoin is that they're trying to get liquid to get into some of these IPOs. So a very good question you posed there. Where is this money coming from? But let's talk about that volatility, too, because you mentioned part of the thesis is everyone has to stay calm in wake of, in the light of this volatility that's potentially coming. Although we certainly haven't seen it, at least in this week, as we think about what volatility perhaps should have been. We're seeing volatility still very low, despite the fact that it seems like we maybe should have had it ticking higher. So what are you expecting in terms of volatility here in the coming months?
Yeah, June is historically a pretty flat month for us in the market. I mean, if you look at the history of June, it doesn't really give us much to wow over or much to cry over. But again, oil is going to be a big hinge pin here. Does oil stay high and kind of uncontrollable with the spikes of volatility in oil prices alone throughout the end of summer? If that's the case, I think that starts to creep into earnings calls. I think you start to see forward guidance suspended by managers and operations departments perhaps in these companies. And then for that reason, the earnings call itself, the CEO says, hey, we really can't give much guidance on what things are going to look like. That's going to cause some volatility. And then midterms alone, the history of midterms alone is something that we are preparing for. The idea that uncertainty is not a good thing in the market. We are putting some things into motion right now for our clients in preparation for this upcoming volatility. But again, volatility doesn't mean we're turning into a bear market here. It's just stay calm. We could see a little bit of a rockiness in the stock prices. And again, you got to think about this. Some of these stocks have went parabolic. They have to stop and breathe a little bit before they finish the race.
So, Dale, let's talk about that positioning, because you highlighted some really important things there. We've got midterms, which historically the markets have navigated well, but we've not been in midterms in a macro backdrop that we have right now. So as you're positioning for your clients right now, knowing that there may be volatility coming our way, knowing these parabolic moves we've seen in a lot of these names, where are you looking for opportunities? Where are you taking money off the table? How are you approaching the environment?
Yeah, and so money off the table may be a hard thing for us to say because, again, we are bullish here, but we're transitioning where that money lays on the table. We'll say it that way, Marley, because what we're looking at is leadership that we've leaned into here for the last couple of months and made really good calls on this. Things even like Oracle that took a significant dip, and we've seen a 20, 30 plus run up. This type of run up that we've seen, we're taking profits from that leadership pool that we have. The Amazons, the Apples, we're taking some profits from Oracle, we're taking some profits from Marvell. These names that we've owned for clients throughout this parabolic run up, we're trimming, and I want to be very careful here, we're trimming. We are not getting rid of them altogether. And what we're then doing is rotating into the broader equity markets, because this allows our aggressive investor to be wrong with the thesis that volatility comes, but still profit if no volatility comes at all. So in other words, if the market goes higher, we go higher. But here's what we think. Volatility is going to come into the names that have led us higher. They're likely the ones that will be hit first on the way down. And so what our thesis is here is that we rotate from those leadership names into the broader equity. That broader equity market takes a hit through this volatility, but not nearly the same hit as the names that are leading us lower. And then we buy back into those names at a discount. Again, we can be wrong here and still profit. I just think it's time to understand the rule that you buy low and sell high. We're pretty high right now, Marley.
Dale, always a pleasure to talk to you. I hope you have a great weekend. Thanks for all the insight there. Dale Smothers, President and CEO over at RDS Wealth Management. And we've got a lot more for you today on Trading 360, so don't go anywhere. We've got the big three coming your way.